The trade war between the United States and China has had significant global effects. Today, we'll break down the current sentiment in China, the outcome of the trade war, and the ongoing negotiations between these two economic giants. A recent visit to China by economist Alice Hahn revealed a strong sense of resolve among both government officials and citizens, despite high tariffs ranging from 30% to 145%. The Chinese are confident that they can absorb the economic shock through fiscal capacity and rerouting trade through third-party countries to avoid U.S. tariffs. In the private sector, particularly in tech, there's more optimism than in the past, with executives seeing new opportunities despite the tariffs. In contrast, the sentiment in the U.S. is more negative, with skepticism surrounding the effectiveness of the tariffs. President Trump initially imposed aggressive tariffs on Chinese goods, but he was ultimately forced to back down due to pressure from business leaders and the risk of hurting his political base. In this strategic confrontation, China held the upper hand, maintaining escalation dominance and forcing the U.S. to ease up. As a result, U.S. tariffs were reduced from 145% to 30%, and China's tariffs dropped from 125% to 10%. These reductions are set to last for 90 days while further talks continue. The U.S. aims for a big, beautiful deal with China, focusing on reducing the trade deficit, ensuring market reciprocity, and addressing issues like fentanyl production and sector-specific tariffs, particularly in AI, semiconductors, and telecommunications. For China, the main goal is to achieve supply chain self-sufficiency, especially in key sectors like semiconductors. They are determined to reduce reliance on the U.S. and manage long-term growth while navigating tensions around Taiwan. Both sides recognize the need to rebalance trade, but progress is slow due to differing economic priorities. China is facing a structural slowdown in its economy, with weak domestic consumption accounting for only 40% of GDP compared to 70% in the U.S. This imbalance makes it hard for China to boost demand domestically, particularly since it relies heavily on exports and manufacturing. To tackle these challenges, China is looking to shift towards boosting domestic consumption and reducing overcapacity, particularly in certain industries. The tech sector, especially areas like AI and healthcare, remains an area of optimism as companies innovate to fuel growth. China has been rerouting trade through third-party countries like Southeast Asia and Latin America to circumvent U.S. tariffs, a tactic known as tariff washing. This has caused the U.S. share of China's exports to drop from 24% to 17%, though China's trade surplus with the U.S. has grown. As China divests from the U.S., it's seeking stronger relationships with alternative partners, particularly in Latin America, where countries like Brazil have become key trade partners. Europe is also becoming more autonomous, balancing its trade relationships with both the U.S. and China while reducing trade barriers, especially in the electric vehicle, EV sector. The winners from the trade war are emerging in Southeast Asia, Latin America, and Europe. Countries like India, Vietnam, and Malaysia are benefiting as companies seek alternatives to Chinese manufacturing. Brazil has also gained significantly, especially in agriculture, as China diversifies away from U.S. suppliers. Europe is positioning itself to extract key economic concessions, particularly in tech and EVs. The future of U.S.-China relations could involve a chimerica relationship, where both countries continue to support each other despite tensions, particularly in tech manufacturing and global supply chains. The U.S. remains a strong consumer-driven economy with long-term advantages in innovation, while China leads in tech manufacturing and is growing its global influence through companies like BYD. While the geopolitical landscape remains complex, both the U.S. and China are essential to the global economy. The outcome of their trade relationship will likely shape global economic trends for decades to come. The future may not be a complete divorce between the two superpowers, but rather a rebalancing of trade and economic power that leads to new global dynamics especially in regions like Southeast Asia, Latin America, and Europe. If you found this breakdown insightful, don't forget to like, share, and subscribe for more updates on global economics and international trade.